Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, November 26, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, looking at the daily chart, it looks like they're riding the trend line. There's no material change from yesterday. Mrs. Market grinded a little bit higher during the Thanksgiving holiday week. That's not that uncommon. Of course, we've had sell-offs before, but it's not uncommon to grind up during a holiday period of time. It's called seasonality. By the end of the day, the S&P was up about 0.5%. It's a decent up day. It's called a floater type of situation. And she's in an uptrend on all time frames. When you look down the line, it doesn't matter whether you look at an hourly, 2 hour, 3 hour, 30-minute, 15-minute, 10-minute, 5-minute. Every single chart is in an uptrend. The trend is your friend until she throws your crap out the window. Here's a weekly chart. Is she going to get much farther before we begin the discussion about too far from home base? She can certainly go farther, but how much farther? Not that much farther, but a slow grind up rises the moving average along with price, and they can ride parallel at the same time. Write that down. Put it on a sticky note. We'll take a little detour and talk about the news for a moment to get a bit of a chuckle. Of course, we have some kind of a ceasefire agreement in the Middle East. Israel, Hezbollah, Iran's involved, obviously, to some degree. I don't know, Hamas, Hezbollah. I can't tell one from the other. I'm not sure. I don't know if the Houthis over there, the Houthi and the Blowfish are included. They've been firing missiles at our ships or drones or something like that. Any way you look at it, there's some kind of ceasefire situation going on. And at some point during the day, certain media outlets will pin the reason for an up day on the ceasefire agreement. So, of course, yours truly has to dig in a little bit and say, hey, let's find the facts, right? Because we don't want to take the media's word for it. Can the market really be up on a ceasefire agreement in the middle of an uptrend around new highs? Is that really the reason why the market's up today? And I think you'll find this one rather interesting. Here's a snippet, the Israeli invasion of the Gaza on 27 October. That's 2023. All right, fair enough. Let's go to 27 October 2023. When is that? Right here. The low. The market's been nothing up ever since. Go to a weekly chart to confirm that information. And where is the 27th? Right here. October 27, 2023. And the market's been nothing but up since Israel invaded Gaza. That's not the reason the market's up. Therefore, today is not the reason, meaning the ceasefire. It's not the reason. If you heard any media person tell you that whatsoever, all you need to do is turn around and go the other way. What about inside the numbers today? And before we go on, just as a point of interest / housekeeping item, we're done for the week. If there's a material change in the market on Wednesday, for example, I'll make a video accordingly. But in terms of inside the numbers in the live room, we're closed Wednesday, Thursday for Thanksgiving, and Friday. Resume business the following Monday in uniform, ready to go. No commentary, no live room. Will I get the numbers done? Probably. I'm a numbers freak. So it was turnaround Tuesday, not so much. Got another Thanksgiving holiday goose operation in the early going, so there's no surprise. 599.10 is our bull pivot this morning. This is on the board at 0 dark 30. What does a bull pivot mean? Above, she's bullish. Below, she's not. Not necessarily bearish, but not more bullish for higher prices, so 599.10 is the bull pivot. Above on candle closes, opens the door back up toward the highs from yesterday, and the trend line today coming in around 601.50, give or take. We have a flip side situation, but they didn't go down, so we don't need to review it. But let's see how we did at 0 dark 30 with a couple of numbers at our disposal. Well, you can see right here that 599.10 was in fact our bull pivot. Dipped a little bit, but we're talking pennies here. Finally established price above, and therefore for a retest, grinded higher in the afternoon session to where? Yesterday's highs and slightly above 600.86 on the board at 0 dark 30. Now, this wasn't magic. This wasn't necessarily voodoo, but you get the necessary information at your disposal from an inside the numbers perspective each and every day. If you're a trader trafficking in the SPY, options on the SPY, the ES, the MES, the exchange traded products that track the S&P, any of those vehicles, this is something you need to take a look at. Pause the video, read the notes, go back to the chart to double check the work. It's all in here, everything a trader needs from an intraday perspective for the morning session each and every day. We had some stocks on the move today. We had Amgen, Best Buy, GM, Bluebird. We had Zoom and Burl that didn't hit, or they didn't hit their entry objectives. So those two, the last two, are off the board, but we'll take a gander over at the charts of the first four. Before we do that, don't forget to take a look. If you're interested in all the markets we cover, check out the prices. Put the prices on your chart and see what the chart did or what price did at those numbers during the trading day. These are on the board and updated each and every day. They are available to Inside the Number and Live Room members. It's a value proposition. You saw the numbers in Amgen. This is the way it actually looks in real time. When a stock opens below, gaps below a number, the number is off the board, it disappears. So it opened below two numbers today, and this is what the chart actually looks like from an intraday perspective using the numbers that were on the board before the opening bell. Amgen. How about Best Buy? 84.75. Found support after getting a haircut at the opening bell. Here's yesterday's close. Opens down here, right into the number, and bounces up and grinds up for the remainder of the day. No heat in Best Buy. Nice trade. The numbers work. This is a nice trade. Look at this. The closing print today, for example, is 88.48. Entry 84.75. Nice trade in Best Buy. General Motors, similar routine. Opens below a number. The number's off the board. So this is what it looks like. There's your support zone. Bounced around for a while. Gave you a trade from the third number for sure back to the second, but then dripped lower all day long. How about Bluebird? 38.50. Came from a haircut right into 38.50. Spiked it. Ripped it back up in the other direction. And literally minutes later, you're at a high of 42.19. Look at that rip in Bluebird. Now, what's going on over in Camp IWM? Well, they had a down day, down about 0.7%. IWM happens to be my favorite market-leading indicator. Certainly had a negative divergence today. We're going to note that. Maybe it's a puzzle piece. We'll put it on the table. They were extended from home base, maybe just coming back a little bit toward home base. Eat some time off the clock for a while, let home base creep up to price. That's certainly possible. We're not going to make a federal case out of a small divergence one day. Talk about extended from home base. The folks down at the transportation department also had a down day, 1/3 of 1%, but a down day nonetheless. Also negative divergence. Again, very strong uptrend, a little bit far from home base, coming back at activity. No federal case out of one day, but it is a of note puzzle piece on the table. We're noting it, we're watching it, we're giving it time. We'll see what happens. We also note that we're in a floating type of holiday week situation. Remember the Q people? We have the non-confirmation, no new highs in the Qs. Why is that? Who can explain that? They're making a bearish wedgish pattern. There's no material change, certainly, from yesterday. You had a little tiny inside day to yesterday's candle, so certainly no material change on the chart, but we will defer to the fact that they are above all the moving averages, and the trend is, in fact, your friend, and there's no reason why they cannot make new highs. We will note the fact that they haven't made new highs, and they have a lower high so far. That is information that we will use to our advantage for now, but we're also aware of the fact, while we're being the umpire calling balls and strikes, that there's no material reason why they cannot continue higher. The fact is they haven't yet, and that's the piece that we're interested in for now. Just want to give you a little insight into how the thinking works. Remember, inside my head is a dangerous place to be. What about the financial space? Any material change? Up 10 cents today? Not so much. Uptrend, new highs, up 10 cents. We're not going to make any kind of case out of that. It's not bullish, it's not bearish. It's just a day where they were up 10 cents at new highs. Nothing more, nothing less. What about Smashmouth? Well, we are going to make a little bit of a case out of Smashmouth being down almost 1%, $2.24. And you can see here, we've been talking about this. This is a bearish wedge, bearish flag-ish type of situation underneath some moving averages. Your last line of defense is the 200 period moving average. And if this thing plays out, the energy gets released to the downside, which could also help explain why the Qs have a negative divergence toward making a new high like the S&P. The Qs are being stymied, if you will. That's a trader term. Stymied by the SMH, or Philadelphia semiconductor space. Moving over to a few stocks, Fab 7, if you will. Checking on Amazon, big, healthy, nice up day, up $6, 3%, right in the midst of a floater week. Apple up almost 1%, over $2 today. In an uptrend, the trend is your friend. Mickeysoft above all the moving averages, up 2% today, $9. Google up $1.47, up a little less than 1%. And Nvidia up 90 cents, 6 or 0.7%, yet not bouncing like some others. So you have Google and Nvidia that are the charts that look slightly different. Nvidia is linked to the semi-space. The semi-space is a pretty good proxy for the Qs, and then things come full circle, and you trace back one of the reasons as an example to why the Qs have a lower high so far is through Nvidia. Can we prove that story? Absolutely not. Is it a good story? Sure, why not? Is there really anything wrong at this standpoint with Nvidia from a weekly chart basis? Can they come back toward home base, the 20-week moving average? Absolutely. Is that a lot of points? Yeah, from a day-to-day perspective, looks like a lot of points. Can this be a tail at a new high? Yes, it can, but you're still above all the moving averages, so you respect the current trend. Being the umpire calling balls and strikes, can the 20-period moving average on the weekly chart, 20-week moving average, begin to flatten out if price comes down farther? And the answer is absolutely. Will there be a fantastic buying opportunity if it's down there at some point in the near term? Absolutely. How about Meta? Above all the moving averages, trend is your friend on the weekly chart, going back to the daily chart, trying to recapture the crossover or the convergence of the 20 and the 50 period moving average. You also have a breakdown candle high here. This is a big spot. Get above that spot, she's bullish. Can't get above that spot, there's a leg down coming in Meta. How about Tesla? Tesla had one hell of a run, ran out of steam, got a little extended from home base, eating some time off the clock, letting home base creep up toward price. Tesla, wildly bullish. Look how far they are from the moving averages. This is what they call in the trading parlance, overcooked. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.